Exchange Management Act, I cannot give you all detail in such a short time. Obviously, FEMA is a very big act and it has got a lot of repercussions. But my aim in this small module is to make you understand the structure of the act. That if you want to look into FEMA, what is the structure of FEMA? What you should look into? So I will make you, it is more familiar to you to look into FEMA. That is the maximum I can do. Because if you have to, there is a section, then there is a subsection, then there is a sub-subsection. So then fine prints I cannot bring in the presentation. So I will be telling you about the chapters, I will be telling you what is the structure, what is the basic structure. Like for example, for foreign trade policy also, I did not go into the policy as such. But I told you that how the policy is structured, what is the origin, what is the nomenclature, so that now it is more familiar to you. So if you go to any website and look into the foreign trade policy, you will have a fairly good idea where to look for what. Similarly, I will give you a structure about FEMA so that you will understand where to look what. Right? FEMA, you can buy some books. There are some books available on FEMA only. So that is one of the best source to buy a book, right? And there may be some new notification which may not be there. So that you can download from somewhere.
As the whole transactions are already through banks, in the safe formats. So handling this FEMA, how it is important for us?
The most important thing is that you should know what you can do and to what extent you can do. Where is the dividing line? But one thing is there, if you are doing things in a very logical manner, there are enough room in FEMA now. If you want to send your son or daughter to study abroad, you need foreign exchange. How much you can get plenty, no problem. So the limits are very good. You will see. Or what if you want to this even third country export, logically. You don't have a bill of exchange, you don't have how to get the money, how to send the money. But if you got the money from the buyer, then logically money should go to the party. So FEMA has got all these provisions are available in this. So it's very logical and it provides you enough room. But if somebody want to do something which is not desirable, then obviously that is crossing the line. So you should know the limit. You should know which is the limit. That is very good. So that is very much understandable. But nevertheless, understanding the structure of FEMA is very important for anybody involved with the export-import. Very, very important. Especially some of the sections which relate to export-import only. That I will tell you that which are the sections which relate to export-import. I will tell you the structure and I will tell you which are the area which matters to exporters and importers. So what is the objective of FEMA? It's a 1999 law to consolidate and amend the law relating to foreign exchange, facilitating external trade and payments, and promoting orderly development and maintenance of foreign exchange market in India. Introduced after objections to FERA. The FERA was very stringent, limits were very less. An act to control, regulate, restrict or prohibit foreign exchange, keeping in view the interest of economic development of the country. Like for example, we were talking about that we have exported something, we cannot import it. If you cannot import it back, logically, then you are hampering the development of the country. Or you have imported something, you don't like it, there is some problem, you should be able to export it back. All these things should be covered in the RBI manual. RBI manual should provide in such a way that if there is any problem, there is a provision for that. So that is the purpose. So that economic development happens. So what is the structure? First is the legal provisions. There are certain legal provisions of the Act which is the central. Legal provisions of the Foreign Exchange Management. That is one part of it. Then Foreign Exchange Management Act. See, Foreign Exchange Management Act is part of the central legal provisions. Okay? And along with that, there are some notifications, rules notification regulations, master circulars of different types. So all these categories of information which is provided mostly by RBI, it is handled by RBI. For RBI, this is central legal provisions for foreign exchange management. One is the Act. This Act is supported by other things, right? This is how it happens. So Act is not final thing, no. Act is Act there, which is a basic structure. The whole system, the legal provision, is supported by a fixed system and the variable system. This is the fixed part and these are the variable part. And that all these things makes the legal provisions by RBI. And all this is available in the RBI manual. That is available online. And manuals are available. Okay? But these notifications and all, some may be available, some may not be available. So that you have to be aware of. So some experts has to be, maybe you need help of some experts. If there is some specific need. Or you can do one more thing also. If you are not very clear, you can go to RBI and you can file a RTI or whatever form is there that we want to know about it, and you will get the information. So that is possible. This is how it happens. So what is the Act? The Act has got different chapters. Chapter 1, 2, 3, 4, 5, 6, 7. These are the chapters. And what is these chapters about? All about? Chapter 1, for example, is preamble, definitions. Chapter 2 is the regulations, management of foreign exchange provisions are there. Then chapter 3 tells us who is authorized person. Like foreign exchange, authorized to deal with foreign exchange, who is the person, who is the resident, who is non-resident, those kind of explanations are given there in chapter 3. Chapter 4, contraventions and penalties. If you cross the line, if you are contravening with the provisions, what are the penalties and what is the provisions for that? Then chapter 5 is adjudication and procedures for appeal. How do you do the appeals? And chapter 6 is Directorate of Enforcement, DOE. DOE comes in picture. Suppose you do some problem in importation, some problem happens. So custom can only inform. And who it will inform? It will inform the Director of Enforcement to take action. So how Director of Enforcement, there are certain laws by which DOE has to act. So all these laws are given. And finally, the last chapter is miscellaneous. This is how it happens. The very basic structure of the Act. But there is more important thing. The important thing is what are the basic concepts of this management? What are the basic different parts of it in these chapters? One is the explanation of what is the meaning of residential status. Are you a NRI? You are a Indian national, right? There are such sections which only deals with that what is the meaning of residential status. Everybody will have a different type of thing. Like somebody says that my son is living in UK and 6 months I am there, 6 months I am here. So whether I am resident or not resident, So everybody will have different situations. So all the different situations has been mentioned here. That what is your status? Are you a NRI? Are you a PIO? Are you a Indian resident? All these things are given. So that is clear from this section. This part.
This is different with the income tax provisions.
No, it has nothing to do with the income tax provision.
Because income tax also defines the resident, non-resident status. So
that defines from here.
that defines
Income tax defines from here.
Okay, so the both are in line.
Yes. Not only in line, but this is the source.
Okay,
That is the main.
Okay.
That is the main.
So definition will be same.
Yeah. Right? Obviously, it has to be based on this only.
Source.
Right. Then very important part is that two very important thing. All foreign exchange transactions are categorized in two different categories. One is the capital account transaction, and second is the current account. Now, what is the meaning of this? Can you say that the foreign exchange which you have paid for your son or daughter for education is the same category for the category like the transaction which you make for any shipment which you are getting from outside the country for business purpose. I mean, they are totally different,
Yes.
right? So, there are two basic categories of all the transaction. One is the capital account transaction. We will discuss what is the capital account transaction, and second is what are the current account transactions. Now, let me tell you, most of the export-import related transactions comes under current account. Most of the transactions export-import related. So, for an exporter or an importer, the most important part is this current account. We will go in little detail of this, where I will explain to you. Okay? So this is one of the major thing. Then there is another part, that is the liberalized remittance scheme. For what purpose you can send money, including all your third country export or this. You know, there are so many things. Like for example, there is another thing. There is Kaun Banega Crorepati, KBC, Amitabh Bachchan is there. Any foreigner comes India and somehow he joins KBC and wins 5 crore rupees. How this money will be remitted? You know. So there are or any Indian going to see a father is visiting USA to his son for 2 months, 3 months, and he wins $1 million. How that money will come? In what format? How it will be taxed? You know. So these things are all, you know, well defined under this scheme, and it is a very highly liberalized scheme, very comfortable. Lot of room is there for education, for travel, for business travel, for personal travel. You know, like those kind of things. And the last but not the least is the different types of bank accounts. Non-resident account, resident account.
EFC.
We will discuss different types of accounts and which is part of FEMA. And each account has got its purpose and nature different. Right? So whenever we see FEMA, we have to see it in this light. One purpose of FEMA is to understand the register status. Second purpose of FEMA is to understand that what are the capital account transactions and what are the provisions for that. Third purpose of FEMA is to understand what are the current account transactions and how they have to be dealt with to comply with the RBI manual or RBI conditions. And fourth is that what are the different schemes available for what purposes. If I want to buy property in some island outside India, can I buy it? Right? So there has to be some provisions. We are not living in a cocoon. I mean, if somebody has money, he want to settle in some other country, he should be able to settle. Why he should remain in India only? So there must be some method. And of course the different types of bank accounts. And these bank accounts can be of a foreigner, somebody who is a foreign person. He want to have an account in India for some reason. Or has been employed in India. His wife has come along, so she also need an account. Now that account will be different. Or some NRI want to have an account in India to help his old parents. Or some foreign company want to have an account in India for some project work is going on in India and they want to have an account. Right? So different types of accounts are required. Okay? So all these things are covered by FEMA. Okay? So let us go not in very big depth, but let us try to go a little deeper just to get an idea. Because in this small module I cannot go in very big depth, obviously. Okay? So let us try to understand the residential part. For example, section 2 talks about a person who is resident of India means a person residing in India for more than 182 days during the course of preceding financial year. Right? Is a resident of India. Any person or body corporate registered or incorporated in India. An office, branch or agency in India owned or controlled by a person resident outside India. An office, branch or agency outside India owned or controlled by a person resident. All these entities will be treated as resident of India. And if you go to subsections, they will be exact. That in this case, if it is like this, then it will not be like that. You know. So their final details are also given. If you go in depth, so there are certain conditions that this person can have this situation, so it will not be called as person.
How will prove it, sir? That I was out.
Stamping is there on passport.
Passport.
Passport stamping is always there.
But in case of your licensing and PA is there, so there is a word is owned and control. Owned is okay. Control means is your stake, the voting rights.
51% share.
51%.
Shareholding. You are controlling. Right. Now ownership also is a definition. Right. Somebody with a 49% may not be called as the owner.
But the person not residing inside India, the third clause, an office, branch or agency in India owned and controlled by a person residing outside India. How he becomes a resident of India? Resident in India? But physically he is not there.
Physically he is not there, but he is maintaining office. He is maintaining office. So that office will have some account. That will be treated as a person resident of India. That particular office. Like MF Hussain. MF Hussain went to Dubai, right? But he was having account in India or some office in India. That particular office will be called as. Now another example is this singer, a Pakistani singer, na, very famous. Sami. Now Sami, most of the time he may be in Pakistan, but he is running a company in India. He has got an office in India. So that office will be a resident of India. Correct?
Under these categories, a person can open an
Account and like obviously it will not a personal account. Some office, whatever office is running, will have this status. That was one small depth I have shown you, but there are many things. It's only a very small part of the whole thing. Now let us, for example, look at what is the capital account transactions. A transaction which alters the assets or liabilities. Right? Any transaction which alters the assets or liabilities is called as capital account transaction. Outside India, of person resident in India or assets and liabilities in India of person resident outside India and includes transaction referred to in section 6.3. So any transaction which is outside India of a person resident in India or assets and liabilities in India of a person resident outside India and includes transaction referred in section 6.3. So you have to refer to section 6.3 also, which I cannot do it right now. But basic thing is any transaction which alters assets and liabilities.
As an example?
For example, you buy a property in Dubai. You can buy, or you do some derivative trading. Derivative shares, you buy some shares, derivative tradings. You can do it. That's a change of liability and assets and liability. You are free to invest in foreign exchange, in foreign stock exchange. You can do it.
Import export transaction also can fall into that mode. Because reason why I am telling this, suppose I am exporting to my foreign party, so that became my debtor. Once
You have said
money,
you have said
it is also foreign asset.
No, in export import what happens? You are selling the equivalent amount already. You are sending something for which you are getting paid. So balance is there already.
No, that's what I am saying. That will be my asset. Na? If I am selling you something, you will be my debtor. You will give me the money either in LC form or any other move.
No, but within 180 days. But within 180 days, that money has to come. So that's only for short term, no?
Short term, only short term. That will be
The
correct.
point is that in current account also there is a alternation between asset and liability. The point is that because a debtor is also my asset.
Unless you don't get the money, unless you lose the money, there is no change. See, if you send something outside India and you don't get paid for it,
So it's a similar way. If I'm purchasing a property, the property is there. I'm getting a
what are you-
paying money and getting a property.
no, you took the Indian money
Uh,
and bought the property. Property is there only. It's not in India.
From there.
Property has not come to India,
Yes.
right? So that's an alteration of assets and liabilities. So anything which is not balanced, it comes under capital account. There is one more thing I will tell you. Suppose you send your son or daughter abroad for education. Your assets, your liability alteration is there. Money, you have spent the money. You are not sure when you will get the return. You are not sure, and how much return you will get. Again, same thing. Capital account. Anything which is unbalanced, whether it is inward or outward, it can also add to you. You have earned $1 billion lottery in USA, and that money is coming. Again, capital account.
So we have to have this account for those transactions.
No. That will be treated as,
capital account.
for FEMA purpose, it will be treated as capital account transaction, and this whole chapters and sections will apply. Policies related to these transactions will apply. Correct? Okay. As per notification number so and so, dated 3rd May 2000, no person shall undertake or sell or draw foreign exchange to or from an authorized person of any capital account transaction except for the purpose of specified in Schedule 1 and Schedule 2. So, only those transactions which are given in Schedule 1 and Schedule 2 are only allowed for this purpose. Increase or decrease of assets. Right? Section Schedule 1 and Schedule 2. If anything is beyond Schedule 1 and Schedule 2, you are not
For
allowed.
this transaction, you can buy the forex from the your
Yes.
authorized dealer, a forex bureau, and you can remit.
Yes. And if those transactions are not allowed in these two, then you can. But
In that case, they will not sell me. Na? Either bank will say no, forex bureau will say okay, we cannot, because they ask the
they will
what
check.
you are going for.
They will check from Schedule 1 and Schedule 2.
Yeah, Schedule 1 and Schedule 2.
Obviously.
They will say clearly.
Right.
So in that case, the illegal way is to apply to it.
I'm sure in future what will happen, the language will change. That you can buy, a time will come when you can buy for anything except
Except this.
those transactions which are in Schedule 3 or
Like,
some
is a
schedule.
restricts negative list.
Negative list will come. In future it will happen like this. Earlier in export it was like that, but like now it is a negative list. Similarly in FEMA also, in time to come, you will find a list which is negative list, otherwise everything is allowed. That time will come. And RBI is already talking about the capital account convertibility. What is, again same thing, what is the meaning of capital account convertibility? Where the assets and liabilities are unbalanced. That convertibility, which means, what is the meaning of this? What is the meaning of capital account convertibility? That if you are having money in Indian rupees converted in dollars, so liability and assets has changed. Now that the value of that money is now converted into a paper note which is published by US government. So there is a change of liability. Till now, convertibility is in the current account, not in the capital account. But now RBI is saying that in few years, we will have the capital account convertibility, which means that convertibility can happen even if there is an imbalance, even if there is a gain or loss. Why it is allowing? Why? When it will happen? When the Indian government feels that there will be some loss and some gain, and it will neutralize each other. Until that happens, we will not make our foreign exchange, Indian rupees, convertible on capital account. I hope you have understood what I am saying. I'll repeat it. Currently, our Indian rupee is convertible only on current account. What is the meaning of current account? Any transaction which is authorized, which can be balanced out, which is controlled. So, in a macro environment, Indian government suppose sending money for education for this, so it is getting some money from Indian people living there, coming. So it is being balanced out. So that's current account is taking a balance. In capital account, it becomes free for all. You do, you in your own business, you deal with Indian rupees, you deal with bonds, you deal with any foreign exchange currency. Now what is happening? The assets and liabilities depends. If it is in Indian rupees, then it's a Indian asset. If it is in bonds, it's a foreign asset, right? So what is the assumption? When economy becomes so strong that it is equally attractive to keep money in Indian rupees, or as attractive to it becomes as attractive to keep money in a foreign currency, then for Indian government there is no problem, because whatever are the assets will be neutralized by the liabilities. So when that situation comes, India will go for capital account convertibility. I think that makes sense, right? The main difference between current account transaction and capital is that in capital there is a loss or gain. Now overall loss is more or gain is more, that nobody knows. That's why there is schedule 1 and schedule 2. Why it is there? Because by having schedule 1 and 1, 2, government of India has kept a control that there is a loss and there is a liability, so they are trying to balance it, right? That is the idea. Okay. Current account transaction. I am not going into further deep depth of schedule 1, schedule 2. Current account transactions means a transaction other than capital account transaction and includes, for example, payments due in connection with foreign trade. In foreign trade, what happens? Export is also there, import is also there. Then there is a deficit. Deficit is cleared by remittances, right? So again, balance out. Okay. So foreign trade, other current businesses, services, short-term banking, money movement from interbank, money movement, right? And credit facilities in the ordinary course of business, right? All account transactions. Payments due as interest on loans and net income from investments. Okay? If loan has been taken by Indian corporates from abroad, that loan has to go there.
Is it that ECB borrowing transaction will fall into this, right?
What?
That ECB borrowing payment will fall into this, right?
ECB. Yeah. Correct. Remittances for living expenses of parents, spouses and children residing abroad. Okay. Again, logical and okay. Then expenses in connection with foreign travel, education and medical care of parents, spouse and children. Sorry, I made a mistake. Education they have included in the current account transaction. Education, perhaps government feels that we are spending money and we are improving the assets also. See, liability is the money which you are paying. But the government feels our Indian people are becoming more educated and sooner or later money will come. So probably that's why I was not very clear on this, but this education is part of the current account. Right. Okay. Medical expenses, medical care, all comes under the current account. There are certain current account transactions which do not require RBI approval. What are these? Release of exchange less than $10,000 in one calendar year for one or more private visits to any country, except Nepal and Bhutan. Gift remittances less than $5,000 per remitter donor per annum. Donation less than $5,000 per remittance per donor, remitter per donor per annum. Exchange facilities less than $1 lakh for persons going abroad for employment. Okay. Release of foreign exchange less than $25,000 to a person irrespective of period of stay for business travel, or attending a conference or specialized training, or for maintenance expenses of a patient going abroad for medical treatment or checkup abroad, or for accompanying as attendant to a patient going abroad for medical. So all these categories comes under do not require RBI approval. It's all. Okay. So any foreign exchange dealer, you tell this, write this reason, and you will get dollars.
Else you have to take advance approval.
No, not for this.
Crossing these limits.
Crossing these items, you need a RBI. Okay.
You need to inform to your AD, they will take the approval from RBI. You need not to.
Nowadays, see, even
they are
in
the
the
interface,
in the
yeah.
current situation also,
AD is interface.
there is normally no hardship. You are normally able to get easily. I mean, like for business travel, that kind of money is, I think, more than enough for attending conferences or, for normal thing. Nowadays, that problem is not there. I remember in early 90s, there was a whole department of my company which used to do all foreign exchange, like for our foreign travels. In 90s, it was not easy. So there was a separate department for this in my organization. I remember. And for everything they had to fill some forms and after when we used to come back from abroad, we had to send a report to RBI, what we did there and what was the purpose, all this thing. Yeah. Yes. We had to fill a report that what we did there and what was the outcome, all those things. It was very ridiculous, right? I remember my first business travel was in 1989 to Germany and Hungary, and it was a 1 month travel. So I had to really spend 3-4 days just to write the report. I remember. It was not easy. And that time the $1 was about 15 rupees, 14-15 rupees. I remember. It was not easy. And that time, like whatever organization you should do to make things simple, as per RBI, they used to give us $200 per day. $200 per day, and there was no need to bring any proof and all. You have to manage this $200 per day. All your expenses, hotel expenses, food expenses, everything. So it was a starting house where I was working. So they had some benefits available. So as per the RBI rule, any employee which is going for business abroad, they have to do all formalities. But one very good thing was that you give them per person $200 per day, and they have to manage in that. It was not like that $25,000. It was not like that. So everything has to be covered in that $200 per day. I remember it was like this. Now, as I told you, liberalized remittance scheme. Authorized dealers may freely allow remittances by residents, individuals up to $2 lakh per financial year for any permitted current or capital account. Anything with Schedule 1, Schedule 2 capital account, and the others which do not require RBI approval. No problem. Schedule 1, Schedule 2 capital account, and the list of items which do not require RBI approval, current account. Go there and get it up to this amount. You can get it. As per the norms, as per the individual limit.
But you see, by resident individual, it covers company as well, corporate.
Includes. It includes.
Who are the authorized dealers?
Authorized dealers, banks are there. Then
Who deals in
there are
foreign
others
exchange?
who deals in foreign exchange. You will find hundreds of foreign exchange dealers in World Trade Center in Grant Place. Thomas Cooks are big one, but there are small money changers authorized. The whole building is full of them. World Trade Center. You will get the best price there. Actually,
You will see the airport as well.
airport again. Now airport has become very costly.
They are very costly.
Very costly.
Yes.
Where
Right.
is World Trade Center?
But World Trade Center is next to Hotel Lalit on Barakhamba Road. Barakhamba Road, there is a World Trade Center. You go in the basement and ground floor, you will find many. And even in Indraprakash building, you will find many. In fact, my regular one is in Indraprakash, on the ground floor.
What is the role of these World Trade Centers?
World Trade Center again, World Trade Center for international companies Like if I remember correctly, I don't know whether they still have one very big company is there, which has got office, Kejriwal Exports. I don't know. It is Kejriwal. I think Kejriwal. It was a very big company. Kejriwal. Not this Kejriwal, but obviously not this Kejriwal.
This is some sort of business
Yeah.
center facility.
Yeah,
for the-
it's a business center facility for traders. Traders. It is supposed to have offices of international companies, of Indian companies, like Adani Exports. You know these kind of people.
But WTO World Trade Centers, are they as an
No.
organization?
No. World Trade Center means us building in a particular town,
Facility
which is
management.
where you will find the international ecosystem. Actually speaking, in India, unfortunately, we do not have the true World Trade Center. Like for example, there is one near Changi Airport in Singapore, World Trade Center, and every time you go, there is some international trade fair is going on. Every time, you don't need to check. You just go there, and there is one whole floor for exhibition only. So they are actually the true World Trade Centers. In India, we still don't have those kind of World Trade Centers. It will come. Now it will come. World Trade Center means everything is available. All big banks will be there, HSBC will be there, or you can get all foreign exchange. If you cannot get a particular currency, like for example, dirham is not easily available everywhere. So you go to World Trade Center and you will get it. Any currency you will get it. Kuwaiti dinar you will get it. Jordan currency you will get it. You will get won, foreign won. Otherwise you will not get it. Even the banks will not be able to give you.
The rates will be different. In fact, I'm going to compare with the Forex Bureau, which is listed in earlier.
It's just a supply and demand. Like if you go to World Trade Center, because there are so many people, cheaper. World Trade Center is cheaper. It's cheaper.
But as far as the export is concerned, authorized dealers are only the authorized bankers, which comes in.
For that kind of transaction, yes.
That
Yeah.
comes in the-
That is a wholesale transaction. Although technically you can deal with them also. Technically, you can deal with them also. You can get it converted and route through from your bank also. You can do that if you're getting a better rate. Why you should depend on your bank for foreign exchange if he is not giving you a very good price? Actually, right? So technically, anybody who is authorized, but he should be able to provide you that kind of inventory. Banks have got very large inventories. That's why they charge more. That's why their exchange rates are not very good. Because there is a cost of maintaining that inventory.
See,
That big
for
inventory.
any foreign currency transaction, let us say after a foreign trip you came back, and that available foreign currency, if you route through bank, that is on record. And if you exchange with any local dealer, that is not through a soft copy transaction
That is
through
bank
bank.
money.
It's a hard transaction. So how does it?
Bill is there.
Okay.
When you bought
That is a bank only business.
when you bought he will ask for a bill. He will maintain a copy of that.
Yes.
And as a traveler also, you are supposed to carry that bill.
Yes.
Yes.
In some countries they check it.
They'll check it, customers check it. Where is the source of this
From
money?
where the same is issued.
Yes.
But like small currency, if you go to Paharganj,
They will be.
they will give you on near that Ramakrishna Mission.
Large matters.
Yeah, that metro station. You go near that, you can get it. There is no need of a bill and all. You can get also and you can give also. So like suppose you lose your bill, then that is the last records. So you can do it.
That's illegal.
Illegal.
It's illegal. That is illegal. Obviously it is illegal. But they are doing it. The limit includes remittances towards gifts and donations by residents and individuals.
Sorry, repeat again. Suppose any person who came with, I have given you the advance for, like you recently mentioned, $200 per day for managing everything.
Mhm.
You just came back after 10 days
And there is a
some
leftover,
money
leftover, yes.
So the company cannot keep this in books. Someone you need to give it back to the source. What is this?
I don't know about, nowadays it's very clear, $25,000. So today You can give it back or whatever. In our time, in earlier time, what you used to there, $200 is given. So what company had the policy that even if you bring something back,
Yours.
it is yours. I mean, that is a kind of incentive to an employee to do well, to do.
Like our company, we are giving the per day this, and this is for your meeting your boarding, lodging expenses.
Every year expenses, and
So they are giving the traveling.
And being a started house, they had not to maintain any bills.
That's
They will just show per person $200 per.
But in case if we need to, we want to take back it because the actual expenses we can reimburse. So if he's coming back with
You
some-
can take it back.
We can take
You
it
can
back.
take it back.
It's not illegal.
For your own internal purpose,
Internal purpose.
you can do that.
We can also give it back to the authorized.
Yes,
dealer.
yes. But you have to produce the bill.
Produce the bill.
Receipt.
That left.
So remittances under the scheme are allowed only in respect of permissible current and current. That are allowed. So I have again given you little dip that last part of this is bank accounts. Different types of bank accounts. The first is non-resident foreign currency account. Somebody having an account in India denominated not in INR but in his own currency, foreign currency. This account is possible. You can maintain this account in India where the balance will be not be in INR. It will be in so many dollars or whatever the currency is.
What will be its use? Because currency is not in practice in India. So why he will maintain this?
He will maintain this in India for his personal reasons. One of the reason can be that he is maintaining a money in India. He keeps coming to India, so he need not go to authorized dealer to buy foreign currency. He can use his own currency from his own account for traveling to any neighboring country or some other countries. He can use that money. He want to keep it in foreign exchange. Fine, no problem. One more thing. In Indian rupees, he will get some different interest rate. In foreign currency, he will get a different interest rate. It will be international, 3%, 2%, 4%, like that. But in Indian currency, if he keeps, he will get a good interest rate, 10%, if it is FD. But that benefit will not be there. But one benefit will be there, that due to inflation, he feels that even if he doesn't get any interest, he is more happy in keeping money in foreign currency. Fine, no problem. He can keep. It is allowed. It is his money. One more thing I want to tell you. Even status holders can have foreign currency account in India. You must be knowing that.
That's EFC account.
Yeah. They can have an account, status holders, in foreign currency. So they don't have to go all the time to authorized dealers for their retail needs. They can use their own, they can maintain certain percentage of the foreign exchange only. Okay?
Any individuals can also have
Non-residents. You as a Indian will be able to do when Indian rupee become convertible in capital account. If capital account convertibility happens, then any Indian, even a panwala, can keep his money in foreign exchange, even in banks. Bank will provide you a facility to keep in any currency. Right? When it becomes, our currency become hard currency. The meaning is our currency will become fully converted in capital account. Non-resident, then another account is non-resident ordinary account. I think something I have picked up. I think we'll get it more clear. In FCNR account, these accounts can be opened in 4 currencies: pound sterling, US dollar, Japanese yen, and euro. Okay. For the purpose of opening an account, remittances in foreign exchange in the same currency should be received in India. Right? This is the condition.
The FCNR accounts are basically
FCNR, I told you, foreign
the earlier one.
How much is the interest rate?
Non-resident foreign currency, FCNR. Non-resident foreign currency. FCNR means foreign currency non-resident. Foreign currency non-resident. FCNR.
Corporates can open this FCNR account.
Yeah.
FCNR.
See, you remember in the definitions,
Yeah, I understand.
whether it is individual, whether it is office, everybody is
Registered in
yeah. So RBI, for RBI, individual or company does not matter.
But we have opened year.
Then why
year-
there is a current
year-
account and a saving account?
That is for the for the sake of that has been created by bank. See, bank will say that gadhe aur घोड़े को हम साथ में रखेंगे. If somebody is an individual person, he is not supposed to be using it every day. So he is supposed to get some interest rate. So in current account, what happens? The bank says that we cannot treat a business account like a saving account. We don't want to give any interest rate because they are using our services on a daily basis. That's why they have separated out from the saving account to become a current account.
Like for as a service providing organization or individual, maybe a consultant, some sort of, and while extending those services, they have to essentially go for a current account, or they can route it through their.
See, only technically banking speaking, current account and saving account, there is no difference. It is just the convenience and the need of the hour, because you know what is happening, the companies feel a commercial account is a commercial account, a personal account is a personal account. In commercial account, they don't want to give any interest rate. They want to make more money. Current account do not attract any interest rate. So that's why they have separated it out. So that there is a personal account, individual account, and then there is a current account. So that the banks can justify their expenses. If suppose they don't give any interest rate to the personal banking, suppose people will be discouraged to keep money in bank, obviously, right? Which they want, because they are making money even there. They are not giving that kind of interest rate, right? So in current account, they are very clear that we don't want to give any interest. So it has nothing to do with this whole system or RBI. It is nothing to do with the RBI. It is the need, business need, that they have to separate it out. Current account. So it's not mandated by RBI that you do this. No, it's not like that. Okay.
So EFEC account will fall into which category? EFEC. Because we have EFEC account, not FCNR or all that. So where it will cover.
These only 4 currencies are permitted for doing international trade transactions.
No. For maintaining only foreign currency is a foreign currency account. But other than these currencies, you cannot maintain. Like you cannot have a Korean won, you cannot have dinars or dirhams. You cannot have your money in those currencies. You can have the money, foreign currency, only in these 4.
This is set guideline by RBI.
RBI, yes.
So in India, anybody NRI FCNR account can be opened under these 4 categories.
No, it is already open. But when you transact, if you bring money, it has to be converted into any of these 4.
Okay, finally.
Even if you are getting dirhams, it has to be first converted into this.
Because your account type will be this. For this currency, they can give. They will convert.
Suppose you are living in Dubai. So your monthly salary comes in dirhams, and you are maintaining a FCNR account in India. You cannot send dirhams. I mean, you can send dirhams, but it has to be first converted into
Any 4, whichever you are.
then only. So you are giving commission to the bank.
It is costly.
Costly. See, he says, okay, if I send dirhams in a normal way, I have to convert it into Indian rupees. So okay, I am no problem. I will convert it into these currencies. That's all. But somebody who is living in USA, who is getting salary in US dollar, he will be very happy. Because if he is sending $5,000, it will reflect $5,000 only. That's an advantage, right? See, there is another thing I want to tell you. There is one more. I'll give you one more situation when it is very useful. Suppose you are working in USA for last 3 years, okay, but you don't want to live in USA for permanently, but you are not sure when you want to come back to India. So what do? There is every month you save $1,000 and you send it to this account, right? So you are not sure when 5 minutes. You are not sure when and how much will be required in India. You are not sure. And rest of money probably you want to take it back. Possible? Possible. So you maintain this in dollars. Suppose suddenly there is a demand from your parents in India that for this purpose I need money. That much money only you convert in rupees. Rest of the thing is in dollars only. Okay. So finally at some time you feel that you decide not to come to India, you can take your money back in dollars. You can do that.
You need not to exchange.
You need not lose money. So if it is your preferred currency, you keep that in that money and need basis only you convert. When you transfer this money to your parents' account, obviously it has to be converted into Indian rupees.
Why majorly the international trade is majorly in US dollars or euros?
Freely convertible.
Fully convertible and there is a everyday $4 trillion business is there, no? Foreign exchange.
Most powerful
Four.
race.
So number one currency is US dollar. That percentage figures also I have. Some figures I will share with you after the lunch. What I will do, I will share with you some figures on the foreign exchange, on what is the share of yen, the first currency is of course US dollar, second is euro, third is yen. Right? First is US dollar, second is euro, most traded currency, and third is yen. Okay? I will show you the percentage. Every day, $4 trillion business happens in foreign exchange. How much is accounted in US dollar, how much is accounted in yen, euro, and how much in yen. Those figures I will show you.
See, when we create an export invoice, generally we do it in a US dollars. Okay. So is there any mandatory rule that you do it in US dollar only? Or you can do
Any
it in
hard
euros
currency.
also? Or
Any hard currency. You can do it in any hard currency. But the most easy and profitable to convert is US dollar. That's why whenever you go abroad, the one very good advice a travel agent will give you, that if you are not sure that you are going to spend everything, so buy dollars. Even if you are going to Singapore, so they will advise you that take Singapore dollar only that amount which you are sure that you will spend. Rest you convert into dollars because buying and selling rates are very good in dollars. If you suppose buy in Singapore dollar all and you bring half of the money back, so when you convert back in Indian rupees, overall you are in loss. Because the most easily available currency is dollar, supply is very high, so exchange rate is also very good. Commissions are less for dollar. Right. Because it is most traded currency. 82% I think. I'll show you the figures. 82% of the $4 trillion is in dollar terms. Okay.
one more and last question. So against any transaction, if we receive a foreign exchange, it's our asset. So we can keep it in that same format for as long as we want. We can convert it to our regional currency as per our requirement.
That depends on the nature of the account which you have.
No, we can do that. We are keeping.
No, I could not get you. For the export transaction.
See, for against any transaction, we have gained $1,000.
For commercial purpose.
Okay.
Commercial.
So we do not convert it.
Okay.
We keep it. How long we can keep it? Or are we authorized to keep it in the same format?
Yes, you can keep that within 30 days. Suppose you have a balance of March $5,000. So till 30th April you need to convert that. Bank
Within
will ask-
financial
bank
year
will
we
give
have
you
to-
email in advance. So this is your last month balance. You need to liquidate that. So either this facility is provided once you are getting a remittance in export, and you need to make payment of import as well. So for this cycle,
Okay,
they
okay.
allow
For
you
that-
the time. You can get the remittance, and
Balance
you can
it.
make the payment, balance that.
Balance
So
it.
sort of natural hedging you can do that. So you need not to immediate. You are getting a money in your dollar, and you need to make payment in dollar as well for your import. So in that case, you can do the natural hedging.
Buffer period is there.
Yeah, the buffer period there, the bank will allow you 30. Okay, not 30 exactly. If you receive that money on 10th, then on that month it will come to 50 days. Maximum 16 days I would say 30 to 6 days temporary days. That depends on which date you get.
Which date you receive them?
So there is a time frame given.
Yeah, time frame is there. For this one, only for the natural hedging, this kind of system you can do only once you are getting a export proceed in a particular currency and you need to make payment for import item as well in the same currency. So you can make such arrangement.
What is this term hedging?
Hedging is
currency
the
gains,
foreign exchange risk management
currency fluctuation.
through either forward or through swap.
But this
I
is a
need
very good option.
at least 2 hours to
You can do
explain.
that. So now you are getting the money in that currency. You need not to buy.
See, I told you there are 3 risks in the international trade. One is the foreign exchange risk, second is the commercial risk, and third is the transportation risk. Transportation risk is covered by marine insurance. Commercial risk is ECEC, and foreign exchange management or foreign exchange risk is managed by derivatives or hedging. Same thing, right? So there are only 2. See, $4 trillion every day foreign exchange market. There are only 3 tools. One is the spot trading, spot sale and purchase. Second is the forward, 7 days, 10 days. Today there is a forward trade. And third is the swap. Most common is the swap because it's very quite cheap. So, but what is the concept? You know, it is beyond the purview of this workshop. I need a lot of time. I mean, at least 2-3 hours to explain. For that, I have to explain to you the whole foreign exchange market. I have to explain different currencies, how it works. I have to explain to you what is spot. I have to explain to you what is forward. I have to explain to you what is swap. I have to give you some calculations, examples. So I need time, right? But you go to Google, go to this derivatives, forward, swap, you will come to it. Okay, the most cheap method and easy method is swap. And nowadays, because of computerization, swap has become very easy, right? So this is one of the best thing you can do for hedging. Swap. So read about swap. But to understand swap, you have to understand what is forward, right? Okay. So you can do derivative trading.
In foreign trade, there's a certain percentage you can give it in your bank account in foreign currency. Like 50% you can hold it in your bank account.
No, that is
Foreign currency.
no, that is only for the status holder. It is not for everybody.
Yeah,
Not
for the company, not
For-
for the individual, for the company.
No, company also cannot do it.
No.
Only the status holders.
Yes. We are not doing this.
If you have a status holder, depending on your like 1 star, 2 star, 3 star, they will tell you that this much money you can retain. That's an incentive.
Other than DTA, they are allowed. They can keep. Other than DTA, industry, they can keep.
Yeah. Outside DTA, yes.
They can
Outside
keep
DTA,
money
yes.
in foreign account.
Outside DTA, obviously. But in DTA, you have to be a status holder. Okay, now then there are exchange earner foreign currency account, EEFC account, resident foreign currency accounts, and resident foreign currency account. What is the difference between the earlier one and this one? That was for the non-residents, and these accounts are for the residents. What is the difference? The earlier ones, NRO or FCNR, were for the non-residents. These accounts are for the residents.
So company was
Even companies are
registered
doing
company
Yeah.
fall into this.
Yeah, like for example, status holders is the exchange earner. Foreign status holder can have this account to retain the one which you are asking.
Companies
We are
also.
You
having
need this account.
We are having this account.
We are
You
having
need
this
this account.
Other than-
This is for corporate as well as individual also, or only for corporate?
See, I do not see any reason why individual should be allowed, because first of all you have to be a status holder. An individual cannot be a status holder normally.
A resident would not go for this account. Obviously, if you have a bulk dealing of exchange and all that, either he will be non-resident, he will be corporate.
No, but there is one point.
Point is this.
Suppose, for example, Shah Rukh Khan, he must be earning money
From outside.
outside. So obviously he will be, because that money will be so much, it will be equivalent to that star trading house or something, obviously. So obviously he will get. So technically there is no difference between an individual. So obviously they will have EFC account. Or MFSN. He was earning so much of money from paintings. Suppose he is maintaining a personal account, he can have a EFC. Right?
This is about selecting the particular category. But as an organization, generally, organization maintain the one account. Or do they have?
No, they have multiple types.
Multiple accounts. If you spend some currency normally, if you have a 5 currency deal, you can open 5 EFCs.
Even a non-resident can have 2-3 multiple accounts. NRO account, NRE account, FCNR account. Somebody can have, depending on the need. What kind of need it is there. So this is, okay, we'll have to make a break.